Hey everyone, and welcome to today's High Octane Explainer. Get ready because today we are breaking down the July 2026 battle for the crypto bull market. The charts are flashing, the energy is completely shifting, and the market is fighting tooth and nail for a massive reversal. We've actually got these dynamic vector animations and vibrant comic book colors on the screen for you today because honestly, the market action right now, it feels exactly like an intense anime tournament arc. We're looking at this critical junction where macroeconomic forces, heavy-hitting regulations, and shifting capital are literally all colliding at once.
Okay, so let's dive right in. Here is our mission briefing for today. We've got 5 core levels we need to clear to truly wrap our heads around these massive market movements. First, we'll look at the macro catalysts sparking the rally. Second, we face the boss fight of Europe's great crypto purge. Third, we track the smart money as capital rotates from AI to crypto. Fourth, we watch the institutions join the fight. And finally, we're going to break down the technicals to see if we can smash through the resistance.
All right, level 1, macro catalyst spark the rally. Let's get into it. So you might be wondering, what exactly triggered today's sudden market surge? Well, think of this as the initial power-up that just gave the market this massive burst of energy on July 3rd, 2026. Because after a pretty brutal June, the entire landscape shifted basically overnight. You know, in any battle, the environment, the map effects, if you will, can completely alter the outcome. We aren't just looking at isolated crypto events here. We are looking at massive global variables that have suddenly tilted the battlefield totally in favor of digital assets. 57,000. That is the magic number right there. It's essentially a critical hit against those Federal Reserve rate hike fears we've been seeing. You see, the June non-farm payrolls came in at just 57,000, which vastly missed the expected 110,000. Now, I know weak job data sounds bad for the economy, right? But in the financial markets, it translates to pure relief. It means the Fed might actually back off on keeping interest rates sky high. This sudden weakness unleashed a massive surge in risk appetite, giving Bitcoin the exact momentum it desperately needed. And you know, it's not just the jobs data acting as a power-up today. We also have some major macro tailwinds stabilizing the arena. There's this growing optimism regarding a US-Iran peace deal. And from a market perspective, this optimism brings the potential unblocking of key global trade routes like the Strait of Hormuz. Impartially speaking, this geopolitical de-escalation heavily supports risk assets just by stabilizing general market sentiment. And as a direct result of all this, we saw Bitcoin push right back over that $62,000 mark. Moving on to level 2, Europe's great crypto purge. 80%. Just let that staggering number sink in for a second. Experts project that 80% of currently operating crypto exchanges will not survive the MiCA regulations' hard landing. The transition grace periods? Yeah, they're completely over. It is a sudden death round for unprepared platforms right now, and the vast majority simply cannot survive the transition and will be forced to exit the European market entirely. So, what are the actual rules of engagement to get past this multi-million-dollar compliance wall? Well, to survive, exchanges now need literally military-grade anti-money laundering protocols. On top of that, they need a physical EU presence and a local entity. And for stablecoins, it's incredibly strict. Issuers have to hold at least 60% of their reserves in European traditional banking institutions. This wall is practically guaranteeing a massive volume consolidation into just a handful of platforms. So why does this matter directly to you? Well, this massive regulatory wall is going to completely alter the landscape. Because the vast majority of platforms will fail these strict EU licensing requirements, we're about to see a historic consolidation. Trading volume is going to flood out of non-compliant platforms and funnel directly into just a few highly regulated exchanges that actually manage to clear the bar. All right, level 3. Capital rotates from AI to crypto. Now, what's really interesting here is this quote from Chris Perkins. He notes, AI and its agents are going to be using crypto more than ever before. We are basically exiting a phase where AI and crypto were competing for the exact same speculative risk capital. Instead, they are entering this amazing symbiotic relationship. As AI moves toward autonomous agents that need to seamlessly execute transactions, what do they need? They need trustless, permissionless networks. Basically, they need crypto. Let's trace this energetic sequence of how the capital is actually flowing. Step 1. The formerly red-hot AI and semiconductor stocks are facing heavy selling pressure as they kind of lose momentum. Step 2. Because of that, we're seeing significant intraday drops on the NASDAQ 100. But step 3 is the kicker.
All that risk capital doesn't just disappear, it rotates. It's flowing right back into digital assets as investors actively seek out the next high-growth alternative. Which brings us to level 4, institutions join the fight. Check out these institutional power-ups because they are huge. Robinhood Chain has officially launched its mainnet, bringing massive retail infrastructure right on chain. Plus, we're seeing deep trading partnerships forming with DYDX and Arbitrum. And simultaneously, Ondo Finance has launched SEC-compliant tokenized products for traditional assets like Micron and IVV. This is a huge deal. It signals a much deeper, stronger integration between traditional finance and decentralized on-chain infrastructure. The big players are literally building permanent bridges right now. Finally, level 5, technicals and breaking the resistance. Okay, so in one corner we have Bitcoin. It has reached its daily fastline resistance, which is basically a wall that has violently rejected its price 3 times previously. Bitcoin absolutely needs to hold the $60,000 psychological floor. But in the other corner, Ethereum is displaying a much clearer, stronger power-up. It has already closed within its daily cloud for the first time since mid-May, fueled by all the momentum from its upcoming ETF products. And, the market breadth is expanding well beyond just the majors. We are seeing incredible altcoin momentum right now. Uniswap is basically the coin of the day with a very solid 12.5% gain. And in true unpredictable crypto fashion, the chaotic energy of the market is perfectly captured by Fartcoin, which surged a massive 20.59% to lead the daily gainers. All while heavyweights like Solana are just holding steady at 1.20%, digesting their recent massive runs. This momentum is building anticipation across the entire board. Near Protocol is actively gearing up for its own breakout right now, rising purely on the hype of a major announcement scheduled for July 7th. So the altcoins aren't just following Bitcoin's lead anymore. They are finding their own individual catalysts and leveling up totally on their own terms. But hey, before we declare absolute victory, we have to look at the looming threat: $1.9 billion. That is the sheer volume of token unlocks scheduled just for this month of July. We're talking about a massive injection of liquidity and supply that could easily trigger extreme volatility and act as a very heavy resistance against the bulls. So let's actually map out this timeline so you know exactly when to expect the next waves of price fluctuations. Consider these your token unlock boss battles, all right? On July 6th, Hyperliquid unlocks $630 million. On July 11th, Rain unlocks a staggering $812 million. Because of this massive influx, you should really expect continued, heavy market volatility all the way through the end of Q3. Which brings us to the ultimate cliffhanger to close out today's explainer. The fundamentals are undeniably improving, the capital is definitely rotating, and institutions are actively building. But with $1.9 billion in supply about to hit the arena, will Bitcoin successfully defend and conquer the $60,000 floor? Or will July's massive token unlocks force a brutal retreat? Keep your eyes glued to those charts, everyone, because the next chapter in this market battle is being written right now.